Cool, cool, cool. All right. Ladies and gentlemen, boys and girls, welcome back to another episode of The Financial Life with the Military Monday segment. And another veteran on here talk to you about some financial things, some other stuff, experience, what he's learned, what he can share with you, especially right now with the economy going on and stuff. So before I get into that, I gotta do my what I call my shameless promotion. So some of you may know, some of you may not know. I do help people out with some things on their financial literacy that can include helping people to understand them with their credit, what it is, how it works, how to fix it. Also help out with people with some coaching, one-on-one coaching as well, because maybe there's some things in life that you're trying to change, trying to, some barriers in the way, maybe you just need someone in your corner to help you out, things like that. And then, yeah, so if you like help with any one of those areas, you can book call with me at speakwithmatt.info. Again, speakwithmatt.info. Don't need to put in the triple W, what works, so just should suggest you speakwithmatt.info. And also, this episode is also sponsored by Born to Risk, as a book I'm one of the 40 co-authors of. And if you like a copy, please reach out to me. And from there, all the proceeds go to some veterans organizations. So you are doing some good in the world with each purchase of the book. With that being said, I'm going to introduce my guest, Johnny Salinas. Johnny, thanks for being
How you
on, man.
doing?
How you
Not
feeling?
much. Not much.
Good, cool, cool. So Johnny, I got a question for you, man. You served in the military. What branch did you serve in? Of
Army for 23 years.
course, I feel like most people that I have on the segment are always Army. And you said you were in for 23 years?
Correct. Yep.
Okay,
Yep.
wow, wow. No, what made you get into the Army? What was that? Did you know from like growing up that's what you wanted to do, or was it just kind
Just,
of
just to, better myself, experience the world. As a young person, I was 17 when I actually joined the actual delayed entry program, joined in
yeah,
September '93. I didn't actually leave until boot camp until a month after high school in June of '94. But just to better myself, have some experiences, grow as a person, at the same time, serve my country, yeah.
nice, nice. So when you initially went in, were you planning to be in for the 20 years, or you were just kind of just
Well, I
working
didn't
your way
I
out of
didn't
it?
really I didn't really have a plan so the first time I served was in '94 through '97. And
Hmm.
then I had a little break in service. I got out for a little bit. I went to the reserves, and then I went back in 2000. So I didn't really have a plan, just living day by day, just experiencing and just how life goes. And I really enjoyed it when I first was in, had some good experiences, got out, had loved the taste of civilian life, and didn't was was missing the part of the brotherhood and the just the experiences in general. So yeah,
Yeah,
that's why.
gotcha. Okay, cool, cool, cool. So you did your time from 23 years. And after that, like, what did you after that? Did you go right into entrepreneurship, or did you kind of?
So after I left the military, I transitioned into college. I got my business degree. I got my bachelor's in business administration. I graduated cum laude. I got my degree in back of me. I graduated from the University of Houston, Victoria.
Mhm.
Um, and while I finished my degree, I went to become a financial advisor for a private firm. I'm not going to say what the firm was, but I didn't really like the actual situation, on the job training. Being in the finance industry, it's very heavy regulated, both at the state level and also at the federal level. So you have to take these exams, the Series 7, the 65, the 66, depending on what role you are, and to ensure that you are competent and you know what you're doing when you handle people's money. So that was my role after my transition from the military. Go to school, become a financial advisor. I left that firm for about 6 months, and then worked for the state of Texas as an auditor. So I audited financial advisors and broker dealers for about 2 years, which I really enjoyed my job. I really enjoyed my coworkers there. I really enjoyed what I did. Got to experience what a lot of advisors were doing good and a lot of advisors were doing incorrectly. So, and that's what I'm kind of implementing some of those strategies in what I do currently.
Gotcha. Okay, cool. Yeah, so I know when we first spoke, are you currently in the midst of building out your own? Um,
Website, building my own website, just getting things on. So being an entrepreneur, I'm working at my pace. It's just kind of just it's and I'm not hitting the ground running. I'm working at my pace, and make sure when I do it correct. Once I do it the first time, I do it correctly.
Gotcha. Yeah, because you told me you're kind of building your own firm, and it's funny because what's the company that audits financial advisor or something like that you work for? What was the name?
So it's the Texas State Securities Board. So as an advisor, either you work for either as far as compliance, you are either under the state that you're in, or under the SEC, which is the Securities Exchange Commission.
Gotcha. All right. And you're telling me that because now you're building your own thing now, they're going to come to you and you want to make sure you're good
Right,
to go.
right.
Yeah.
Yeah.
Does that kind of make you feel a bit nervous being on the receiving end of it versus the one like doing or
Not really. You just making sure that I'm doing stuff correctly. Make sure that I have my what's called your written supervisory procedures. Make sure that what I'm doing correctly, what I'm doing with my clients, the contracts that I'm signing with my clients are correct. Make sure I'm not overcharging them, or undercharging them. Make sure I have what's called a business continuity plan in place. If something were to happen to me, or if I were to fire inside the building, or hurricane, also power, things like that. You just make sure these, a bunch of what ifs. I also have to follow a code of ethics as well too. So yes.
yeah, gotcha. You can't be like invest in the stock. It's guaranteed. No, I can't say that. That's not how it works. It's not,
Right.
not how it works.
And there's always all types of risk associated when investing. You
Yeah.
know, yeah.
So you're focused more on people with investing now. Is it just like with retirement in general, or is it other things too as well that you do with as far as
Just if in general, if veterans have the thrift savings plans, and they don't, it's just sitting there, or people civilians who have old 401ks not doing anything, or just actually consulting with individuals as far as budgeting, consulting with them, having a plan in place, because if you don't have a plan, and when you get to retire, like, hey, I don't have enough money to retire off of, then you have to keep working, so it's better to sit down with someone who's educated in a finance world or the field to understand, hey, let's start at this point A and let's get to this point B. But here's a plan.
let me ask you this. Why do you think some people will leave like they'll leave an old 401k or TSP, and why don't they like, do you think, why do they leave it, not just be like, let me take it with me? They just move
Well,
on from it.
one is maybe just trust, as far as having someone manage your money for you, or two, they just don't know what to do or how to do it.
Right.
As far as transferring the old 401k to a IRA, whether it be a traditional IRA or a Roth IRA, so just the unknown. And if they do withdraw that money, what are they going to be penalized at, depending on the age, and yeah, so yes.
Gotcha. Okay.
It's
Um,
the unknown, so
yeah. The unknown is what limits people basically from move forward into something different that could be better for them ultimately.
right. And right now, with the election coming up tomorrow, markets are all-time highs, so what's safe to invest in, bonds, fixed income, something that's a little more conservative, that doesn't fluctuate as much,
Right.
and it just depends on the strategy on the person as well too.
Yeah, that makes sense. That makes sense. I want to ask you this too. So there's when it comes to investing, right? Is there a lot to it? Is it really that complex? I mean, there's a skill to it, or can is
Yes,
it really
yes and no.
simple?
Yes and no. It
Okay.
depends on the person.
Okay.
As well. It could be a person, it could be a small business, it could be a high net worth individual. It just depends on the individual, or what's the goal. Okay. If you give me, let's say, a $250,000, $250,000. From here, what I'll do is I'll present a plan to you. Hey, let's invest in some stocks, let's invest in some bonds, let's invest in some what's called ETFs, or exchange trade funds. Okay, let's invest in some cash, or just set it into some certificates of deposits, or something that's very conservative. Make
Right.
sense?
Makes sense.
Because the market's really high right now, you don't really want to invest in stocks, because what's going on globally. Look at the Ukraine and Russia war. It's been going on for over 2 years.
Jeez.
Okay, look at Israeli and um, Hamas, I think is
Yeah, 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 Hamas, yeah.
so and then also potentially what's also with China and Taiwan, that's something that's potentially that's might happen. And if you understand what's called the business cycle, so like pretend like the arch of McDonald's
Mm,
in 2007 and 2008 we had the financial crisis
right,
and the economy went down. And of course, it kind of bottomed, and then it kind of slowly came up, came up, came up. The economy was good. Then boom, what happened? COVID, right? And when COVID happened, the economy kind of sank a little bit, kind of bottomed out. Now the economy is doing good, and now it's kind of peaking a little bit. Now it's going down as interest rates are going to drop soon. Okay, I think interest rates decisions again is next week, I believe, on
is
the
it?
third.
I don't
Yes,
even follow it, but yeah, I just hear about it. Like, yeah,
on
they're
the
gonna.
on the on the 13th. But occasionally when interest rates drop, foreign investors tend to pull their money out of our market because they're getting a less return on their money.
Right,
But you can kind of see how the market topped around 586, and now just slowly right now we're at like 570, 569. So just kind of slowly going down. And there's other variables at play as well too, you know. Um, but interest rates is one of them. One's called the yield curve is another one. Unemployment's at all-time high as well too. If you notice in the past year and a half, a lot of companies are laying off employees. So and they're being more conservative. The shift with AI and crypto as well too. That's trending. This afternoon, I think a company called Palantir, ticker name PLTR, had a good earnings, so they're at all-time highs. So, but it's a lot of different variables on with a person and what you want to invest in and what they want. You know,
right, right. I was gonna ask you, what are your views on crypto? Like, where do you see it could be useful? Do you feel like it's not useful? Do you think it's just a gamble or something? And do you, I don't get you in trouble. Do you help people manage that in what you do, or I don't know, just where?
well, one crypto is not backed by any asset, just like maybe like the dollar, right?
Correct.
But it's a shift in investing in the way can you access money. If you look at the war in Ukraine and with Russia, people can access their money, but they could access their crypto. Okay, so if you understand China and Japan, if you ever visit China and Japan, they're going to almost like a cashless society, kind of like almost like us. We use debit cards,
Yeah.
checks, credit cards, you know. So we're going almost to like a cashless society, and it's kind of like almost like crypto. It's cashless. Out of like 20, 30 people, how many people actually carry cash on them? You know,
Not that many.
not
A
that
few,
many.
some do, but it's not. It's
It's it's a little too nut. You know,
yeah. And
but
this is,
crypto itself, it's not regulated. But you also have to understand is that it's also there's a lot of scams out there as well too.
oh
Okay,
yeah,
if you were to put your money into the bank, okay, and a savings account, a trade account, that's an interest bearing account, correct? Some companies in the crypto world offer bearing accounts. As far as you put your money in crypto, they can bear interest, but that's illegal because if you put your money in your bank, it's backed by the FDIC. Or if you put your money in the crypto world and draw interest, what happens if you lose all your money in crypto? It's not backed by any agency.
right.
Okay.
Just you've lost it.
Right. Right. So, but there has been studies about the Federal Reserve going to a cashless society, going to more of a what's the word I'm looking for? More of a blockchain, more to handle and understand what's called underground economics. So the government needs to be hands on those transactions as far as like if you pay your guy to cut your grass or you pay the guy to go clean your swimming pool or having a maid come clean your house. You pay them cash. The government doesn't have those hand on those transactions. So yeah.
Once it's money.
It's understanding the dollar and how it works, and where's the future taking us, and let's see how it goes.
Do you think crypto will become more a normalized thing where it will be backed by something, or
Yeah, of course. Yeah, yeah. Once it gets more regulated at the federal level, yes,
gotcha.
yes,
Okay.
yep.
Cool, cool. Now, and how long have you been doing how long have you been in the financial services for?
A little over 6 years, I would say.
6 years. Okay. No, I because I only asked because I didn't know. I didn't I asked that before. What have you seen as far as the mistakes people make when you're working with them? Like prior to working with you, and even when they do.
Not being patient, not being
Mm,
patient. Okay. They think that when you invest your money, you're gonna make money right away.
no.
Okay. That- it- that- but again, it deals with the person and their goal and what they want to do with that money. Are you saving that money for college education? Are you saving for a down payment on a house? You
Yes.
saving for retirement? You never want to put anything more in the market than more than what you want to lose. Okay. You want to start small and compound that dividends, compound that interest. Okay, put away that $100 a month or 150 or whatever you can, you know, and just start slowly saving and think of the account as a savings account for retirement and never touch it. And really look at it once a year, twice a year. Given that you have a good advisor that you trust with your money and know what they're doing, whether it be a large firm or even a small firm.
Gotcha. Patience. That's like the biggest thing. Because
Patience is
it's a marathon. It's not a sprint.
well, if you look at back in COVID, back in 2020, March of 2020, a lot of people, a lot of pension companies lost their money, or lost value, should I say? Okay,
Yeah.
they were scared because they were losing a lot of the stocks. Everything didn't matter what you were investing in, it was going down. But here we are, 4 years later, the market more than doubled in that time frame. It's
Jeez.
only if you were patient, you know. But of course, no one knew that this was going to happen. But again, patience is the key.
Right. Right. Yeah. It's the same thing in the space of with people with their credit. It's like it's a marathon. It's not a sprint. It's a lifetime thing. And people, I need to fix now. I'm like, you don't even know what you have on there and where you're at. That needs to, the work needs to go in to get you to where you want to be on credit space. It's like I wish people would just understand that. Like you didn't get to where you were financially like that. It's been years you doing the same thing, maybe a little change here and there, but not really doing a huge overhaul so that in 5 years you're different than where you're right now, you know? And
Yes.
do you, I mean, this part, do you sit down with your clients and say, look, like let's have like a goal of like what's the end goal, like what's the destination that you want to get to? And like so
Yeah. So that's part of the contract. When I first engage into a prospective client or a client, that wants to invest, I give them two documents. One's called a privacy disclosure. Like, hey, I'm going to gather some information from you. I'm going to gather your social security number, your address, your name, non-public information, and just know, hey, I'm not going to sell your information. It's confidential. Once I put it on my computer, I have antivirus software, things like that hackers can't get into, and basically I protect your information, and I'm not going to sell your information. The second form I'm going to give them is called the Form ADV2A, which is a brochure which tells them about my company and how I invest your money, the different models that I offer, and it goes into what's called an IPS, the investment policy statement, which I ask them questions about, your risk tolerance, what is your investment horizon, you
yeah.
know, at what point do you need your money, and then as far as do you need it every month, every 3 months, or twice a year, so from there it's called suitability. Like, hey, I'm getting a snapshot of what you have now, what you want to invest in, and what products I'm going to invest in for you.
Cool. Get a nice little roadmap of where to go and say,
Yeah,
hey,
yeah,
here's the
yeah.
foundation for
Whether it
everything.
be, whether it be mutual funds, whether it be bonds, whether it be stocks, whether it be, something that's a more conservative in a money market account, certificates of deposits, treasury bills, things of that nature.
Makes sense, makes sense. Because there was a time where I was getting real big into the stock market. And it's funny, I look back before I got the stock market and really got into it. It didn't make sense to me when I would see movies, and even as I got into it, people would say, don't gamble. You can get hooked on it like it's like as a drug. And I was like, how does this make sense? Because before I got into it, I was like, well, it takes time to make this money, and it's not like making it right. Like, how in the world can you just get into it and gamble away? And then I got more into it. And I went, oh, that's why. Because then you see all these IPOs come out and they say,
Right.
look,
Well,
we're selling
it's
shares
almost
at 50
it's
cents.
like
You're like, oh, wow.
it's almost like going to a casino. You go with your friends, you go by yourself, you get real happy. I'm going to have a good time. You start making money, but guess what?
Mm,
Who always wins? The
the
house.
house.
Right?
Yep.
But if you go in with a set of rules, your discipline, you stick to a certain strategy. Like, hey, this is, if I go in with $500 and I win $500, I'm gonna walk my happy butt out. You
Yep.
know, so in the stock market world, when you pick stocks or bonds, you have to understand what's called the beta, what's the volatility of the company. Look at the technical analysis. When's a good time to buy? When's a good time to sell? Look at fundamental analysis. Look at their financials.
Yep.
Look at different ratios. Look at quarter over quarter, year over year, and see how the company is doing or how the company is sound. Make sense? And of
Yep.
course, the last one is the economy. How's the economy doing as well?
When it comes to the times to invest, because I can't believe people still try and time the market. And I'm like, you can't really do that unless you're Nancy Pelosi. But that's a whole different discussion.
Yeah, with timing the market, it's technical analysis. It's with news, catalyst. What's earnings. What's causing the stock to move down really quick. So like I just mentioned a while ago, PLTR, Palantir, had a good earnings. They moved up about 10%.
Yeah.
It's a very good, in my opinion, it's a very good stock.
Do you do you see a trend when it comes like because right now as we record this if we're going into the holidays that like that is there tend to be a spike in the market like come the new year. So do
Yeah.
you would you say that I mean again investing is a marathon. It doesn't matter what it is, right? Would you
Yeah.
say like it's a good time to buy into more this time of the year and then kind of let it rise and whatnot, or just again just
So there's a word called triple witching or quadruple witching.
mhm.
Okay. I'll say it one more time. Triple witching or quadruple witching. And this happens the third Friday in March, June, September, and December. Okay. And this is when this has to do with options, with the sell off of equities, indexes, futures. Okay. So the word is triple witching and quadruple witching. It's a sell off of, so when you buy an option, that person who buys it controls those 100 shares of the
Right.
contract. Okay. And usually what happens about 2 weeks before the market or before the triple witching is the market tends to sell off. So I think it's yeah. Yeah. So that the next triple auction is in December. So depending if we're in a bear market or bull market, it depends on the point in which it's. So think of it as a line, as a parallel line. Stocks are going to go up and down.
Right.
So near triple witching, before triple witching, it's going to start going down, start retracting. Okay. So that's when you want to buy during the stock market. So on days when it's red, if you want to invest in the stock market, that's when you want to buy when things are on sell. If that makes any sense. You don't want to buy when it's going up. You want to buy when it's low. Okay, when people are selling, and if you do your due diligence on that company, and truly believe that company is going to last the next 10, 5, 10, 15 years, of course, invest in that particular company. Or an ETF, an exchange trade fund, where you invest in one ticker, but it has multiple companies, like, for example, XLF. Now that goes over the financial industry. XLK goes over the technology sector, and there's multiple different types of ETFs out there.
Gotcha. Yeah. Okay. I was wondering about that. That just came to me. I'm like, is it really? Because New Year, everyone's like, yeah, it's New Year. I'm gonna do my thing. And it's like you should have been working on stuff, for the New Year's for us, I guess. I had something else I was gonna ask. Um, stock market, but what was it about the stock market I was gonna ask you? It was. I don't remember. Oh, it'll come back to me as far as that goes. Um, stocks, bonds, trading, retirement, the fun stuff as well. This is gonna drive me nuts. Um, what? That's what I was gonna ask. It had something to do with not crypto, not trading. Oh, I remember now. Thank you. Good God. Where do you? Okay, because this happens. Like, what were your views, or what are your view on the whole issue, the controversy that happened with GameStop? Because I thought that was kind of funny at the time and just insane. Well, what are your views on that? And like, how
Well, there
do
was
you
early on.
yeah, do you think someone should avoid that? Because that again, it's a gamble to like because people bet against it and they short it, and that's when people understand how when you bet against something, you're pretty much being loaned the shares, and if it
Right,
doesn't go up. Oh,
right.
yeah.
Yeah. So there's a movie on that called Dumb Money on Netflix. I don't know if you've ever watched it before, but as far as the GameStop, the company itself wasn't fundamentally as far as financials during COVID. People weren't actually going to the store and buying games or selling the games, so they weren't making money. So I think there's a guy, but his name was Roaring Kitty. He got on Wall Street Bets, tried to get on Reddit, and he got his investors, and he showed his financials, what he was buying, and they just people just kind of piled on and just bought more GameStop and more GameStop, and it just went through the roof. It's just one once in a moon type of thing, and this is called pump and dump. So basically, the stock is going up for
Hmm.
no particular reason other than the investors are just buying it.
Right.
So yeah,
Yeah. And then can you explain, I think what's called it's like what the guys did was it no, okay. Because there was what was it called in that with GameStop? It was the technique where you're
short
betting
interest,
what'd you say?
short interest.
No, it was when you're betting, not I guess betting, but you're gonna
I think
hedging
again,
it, you're not hedging, you're betting that like a company's gonna like the stock's gonna fall and you make money with it. Can you explain
shorting,
that? Because that's what the GameStop thing was because
shorting.
it was hurting the big people in Wall
Yeah,
Street. They
yeah, it's
got
called
upset.
it's called shorting.
Shorting
So
that. Thank you. That's what it was. Yeah.
to a normal investor, the only way they make money is to buy stock and hold it. Okay, but that's not the case. There's multiple ways to make money in the stock market. Okay, so the opposite of buying a stock is called shorting a stock. When you short a stock, you have to have a margin account. You have to have a minimum of $2,000 to open a margin account. And basically, what you're doing is when you open a margin account, either you can buy more stock with it. So basically, you are getting a loan from your broker dealer, from Fidelity, from Charles Schwab. Okay, they're giving you a loan, and that broker dealer is getting money from the bank. Okay, and
Right.
you're paying a set interest rate on borrowed that money. Make sense? Now, what you do with it, either you can buy stock with it and hope to make more than what you pay on the interest rate that you're paying the broker dealer, or you can short stock. Okay. And shorting stock is when you buy or sell a stock, which is borrowing, you buy it at a high point and then you buy it back at a low point, and the difference is your profit. It's just
Right.
the opposite of buying.
Right. And what happened with GameStop was they kept buying it and people were shorting and were like, oh no, and they were like, I owe this money now. And then
Yeah.
the everyone it's funny. I remember watching it on the news and how all the big like investors and people were saying this is wrong. We need government interference. I'm like, okay, so you want government interference when you're losing money, but when we start doing it, suddenly,
Yeah.
oh no, I want government. It was just the hypocrisy of it all and how
Yeah.
would you say that unless someone studies it, would you say that the market is rigged not so much in the average person's favor because these companies will just make so much money stock market and then they get in trouble, they get bailed out. Like, do you feel like it's really rigged, or do you feel like, hey, you know what?
I
If you
don't
play the
I don't
game,
feel
you can
I don't
still
I
win.
don't feel it's rigged. I feel it's there to help the individual set up for retirement. Okay. So basically, you are putting your money into an IRA, a 401k for teachers, a 403b, a government employee, a 457 plan, you know. So you're putting, or even the military, the thrift saving plans, a TSP. So you're putting money into an account, you leave it there, let it grow. So at some point, if you need it, you can use it for medical expenses, an adoption, or just need to take a vacation. Of course, depending on your age, you might get penalized for it, but it's there to as a backup plan because
Right.
some people don't save money. They don't know how to save money. That's why that Social Security was enacted as well. Okay, that's one of the
Uh,
reasons because people didn't save money. But if you look at today, a lot of people can't really live off Social Security. So people need to have a plan. Whether they're in the very young 18, 19, 20s or mid 30s, mid 40s, even late 50s and 60s. Okay, you have to have some sort of plan of where you're at now and where you want to be at, and just be realistic, okay? And just, talk to yourself, talk to your spouse, and just understand, hey, we have to have a plan, just because you never know if your husband's or the wife is a breadwinner and something happens to them, okay, what's going to happen? Okay,
Right.
who's going to pay the bills? Do you have insurance? Do you have life insurance? Do you have health insurance? You
Right.
know, so these are the hard questions to ask or to understand because nobody wants to talk about them, you know.
Yeah.
So
It's a morbid topic that that doesn't want to get talked about. Let me ask you this, as far as the stock market goes, why do you think that's not really taught? And by that I mean it's discussed, you hear about it in the news and the things, but like why do you think it's just not taught? Like here's the basics of the stock market in a manual, A, B, C. Level one. Level
okay,
two, you have to pass
uh,
this, then get to level two.
by who? You talking about, in the family? You talking about at schools? What do you mean by
That's a
taught?
good. Okay, fair enough. I would say really just in general, like families and schools, because you hear. I remember growing up hearing about stock market, and I thought it was some boring, complicated thing. Then I got involved with it when I got older. I went, oh no, this is amazing. This isn't boring at all. Yeah, it can get more complex, but it's not. It's pretty cool. You learn it. You buy stock in something. You just wait, and then over time you make money and you don't really do much. Like I'm like, that's awesome. Like, this is not it needs to be part of financial literacy, I guess. It's like, why do you think it's just not discussed beyond news and then it's only
Well,
talked about
it could
once
be
once you
it could
start like
be
working for a company.
it
So
could be with families. Families aren't really educated in finances. Okay,
right.
that can be a variable that my mother didn't know about the stock market. They had a third grade education, third and fourth grade education. They never finished high school. You
Wow.
know, uh, so that could be one. In the school, why I don't know why it's not taught. So maybe some private schools, maybe they're taught, but I don't know about public schools. As far as the stock market, I know it's at some level they do have some finance classes, in public schools, but yeah, I don't really know, to give you the truth. So I would love to volunteer for some, veterans or organizations that need help with financial literacy, so
That would be me too as well, because I would like to work with more veterans in the financial space, the credit side, and have you come in and talk about, what you do. It's like, hey, you need both. You want to be set up with both, and then have a good retirement and all that stuff. So cool, cool, cool. Um, is there anything else that you want to share that like people should know? Maybe you know, be it about money or just life in general. You know.
but just as I said earlier, just having a plan with your spouse. You know, if you don't have a plan, you just pretty much spending money here and there. You're not saving money to the side in savings account or brokerage account. You're not investing. Talk to a professional, whether it be me or someone else. And having a plan as far as a legacy, as far as where you're going to leave your children, where you're going to leave your grandchildren. Why are you working? To pay bills, but is your money working for you? That's the ultimate way, whether it be in real estate, whether it be in stock market or some passive other income. So at some point, that's the ultimate question you have to ask yourself is like,
Yeah.
why am I working 9 to 5? Trying to get yourself away from the 9 to 5 hustle. And if you do start a small business and you're making good money, what are you gonna do? What are you gonna do with that money? Who are you gonna trust with that money? Who can you consult with that's going to be a professional that understands, veterans, understands, the value of the dollar.
Exactly. I like it. Cool. Johnny, man, I appreciate you for being on. It's been good. Been an episode. Learned some stuff. How can people get a hold of you?
Well, right now they can just either text or call me. My cell number is area code 502-510-6649. My name's Johnny Salinas.
Cool. Awesome. Straight to the point. Appreciate it. Johnny, man, thank you for being on, man. Appreciate it.
Yes, sir.